This is Mark Anthony with Mercury Time Price Analytics. Welcome to our end of day video for Tuesday, August 25th. Had a problem compiling last night's video, so we're going to run through what we saw yesterday, what happened today. That'll hopefully give you a good idea of the algorithmic setup going into Wednesday. What you see on the screen right now is the ES continuous contract. Once again, coming up into a regression line. Now, if you haven't seen any of our videos, I'll make this real quick so I don't bore those of you who've been watching our videos regularly. Time is more important than price. And what these algorithmic regression lines are is they're a graphic representation of the fact that time is both circular and linear. All right, you look at a clock. Circular, right? Same number of hours, minutes, and seconds in every day. But time is also linear. And that is a key concept to understanding how institutional algorithms work. Now, what do I mean when I say time is linear? Well, look, you can stop a clock if you take the batteries out, all right? But time doesn't stop, it doesn't stand still, and it doesn't go backwards. And so what happens is price tries to continue to keep connection with these algo regression lines. And what's interesting about them is sometimes they're very binary. Price will come up to the tick and back off like it did tonight. Now, that doesn't mean that you're going to get a 100 handle move down. You may not go down at all. It may come back up and take this out. But price either strictly obeys the regression line, and then you get a little back test, or it will fight over the regression lines and release. Now, you don't know what kind of back test you're going to get, and this is why I love having these on here, because if you're the type of trader that wants to use an algorithm, well, you see right on the screen. We'll show you another screen of this later, but our automated algo was long on Monday, flipped short before the open today, flipped long at the end of the day. Now, we didn't take that one at the end of the day, and that's why I call these points algo triggers and not algo entries, because we're not going to take every one of them. I mean, there's certain entries where they're just not worth the risk. And let me say this, I don't care how experienced you are. If you're trying to trade every inch of this tape, you're taking on more risk than you need to. Pick your spots. If your style is to trade in and out frequently, we've got algorithmic metrics for that. But if you're looking for just the one or two, or sometimes three high probability trades a day, you don't have to trade every inch of this tape. So let's take a look at yesterday and today, because again, I want to paint a picture for you, because the underlying structure of this market is like a sinkhole. It's going to open at some time, and you're going to get a sharp move down, and it literally can come at any time. It could come in Globex, it could come in the day session, it could come at 3 a.m. Eastern time when the European market opens. You don't know, so you've got to be prepared. Right now, the algo is fixing to try and trigger short again. So let's rewind the tape a little bit. Look at some of the screenshots. This is the LQD, which is the investment grade bond ETF. Now, this is investment grade. This isn't the junk bond ETF. I mean, with junk bonds, you expect to get some nasty pullbacks now and again. This is investment grade corporate bonds. Now, this is yesterday. I'm going to show you a chart of today, because it got to a very, very important algorithmic support level. It held for today, but I still don't like the way it closed. But, you know, you're talking about long cycle, very slow moving algorithms. It broke all the fast algos up in here. And then you get the first test of the intermediate trend algo, this purple line. It wanted absolutely nothing to do with it. And this is today. I'm sorry, this is yesterday. We'll show you today's action in a minute. This is the dollar index. Now, rumors of the dollar's demise have been greatly exaggerated. This is not a bearish chart. In fact, this is quite bullish. And what this is doing is it's coiling into an ascending triangle, or a symmetrical triangle, excuse me. And those typically will resolve themselves strongly to the upside. But I want to point out a couple things here. It's not just the fact that it's regained short cycle support. and intermediate cycle support. I want you to see the word gusto just popped into my mind. What a stupid old word. I'm really aging myself. It went through the algorithm with gusto. All right, we'll think of a better word. But look at the way it went through the short cycle algo Wednesday of last week. That's big time momentum. Look at the way it went through their intermediate cycle that same day. Now, you get a back test, and all this was a little pullback. I mean, that was a strong move. It needed some time to pull back. But look at the manner in which it retook this intermediate algo, which is the purple one right here. Boom. Now, when you get these slingshots where you break a longer cycle algo and you do this, that's bullish. And this is the way it ended yesterday. Today it backed and filled a little bit. It essentially closed right at the daily bull bear pivot. Didn't do anything wrong. So, everybody that's saying, well, they're printing all this money, that's bad for the dollar. Put it this way, it's not good for the dollar. But compared to every other currency, I mean, you're talking about the cleanest dirty shirt in the laundry. And if you're bullish equities, look, equities can continue to go higher with the dollar going up. But that's not usually the way it works. So this is another thing. I mean, the LQD chart, this is something to put on the side of the ledger to be very careful. There's your dollar index chart. This is our Saturn GT40 algo. This is the coolest thing I've ever seen, because this is literally third and fourth derivative algorithms. Because what we look at here is the purple oscillator and the two white oscillators. And what you're looking at is the peaks of these slopes, the troughs of the slopes, and where they cross over. Because this is, look, there may be another one out there, but to my knowledge, this is the only predictive algorithm available in the commercial market. I mean, if you've got one out there, I'm not trying to compare our system to yours, but if there are other ones out there, not making an absolute statement, but this is so sophisticated. I would be willing to bet that there is nothing else out there that does this outside of a very expensive institutional algo. Now, here's what I mean by predictive. This is yesterday. So we're looking at the slope of the purple algo. Now, you're looking for peaks and troughs and crossovers. So you can see yesterday, you came down here and you made this little trough. And here's how you tell that this back test failed. You draw a vector, meaning a horizontal line, right at the trough of that slope, and that's right where it broke. Now, that's the first back test that failed. Where's the second one? It's exactly at that same price. And this is NQ, by the way. The trough of the slope here of NQ, yeah, this was yesterday, 11,632. We put on a short at 11,633. Shorts in this market are rentals. They're not long term. So you put shorts on so you can take them off. Okay. So we legged out of this Monday. We legged out of it in two parts in the morning, and then the second piece in the afternoon. Kept 1/3 of the trade on, and we added back to it into today's close. And that's the way you trade these. I mean, if you're going to short, you have to take profits regularly, and you don't overstay your welcome. You don't get stubborn short. All right. So we're going to do another video on the Saturn GT40. If you look at the YouTube feed, there's two of them. There's a really long one. It's like an hour long, and it's got a black Ford GT40. There's a shorter version that's got a red. I think it's like a 2021 Saturn GT40, which is $500,000. I showed a picture of it to my wife the other day. She asked how much it was, and I said it's $500,000. She said, you could buy a house for that much. I said, I'd rather live in the car. I mean, think of it. You can live in a car, but you can't drive a house, right? All right, bad joke. There's a lot of people that are struggling, so that was not in good taste. I apologize. This is yesterday, and I'm a one-take kind of guy, so ordinarily I'd redo the whole tape, but we're not going to do that. This is yesterday. You come down into the regression line. And this is where they come in and save it. Now, when I say they, I'm not talking conspiratorial, but let's face it, this market is being managed. And I'll show you evidence of that in a couple slides here in a minute. But this is exactly where they came in to save it, because this is where they had to. And the problem with managing the tape, we're talking about the S&P 500, is if you won't let it have even the slightest modicum of price discovery, what they have to do is they have to keep coming in and supporting it at progressively higher and higher and higher levels. Think about this. 3410? I mean, the fact that they have to come in algorithmically and support the tape at 3410? Are you kidding me? And then you got this move into the end of the day. So, let's see. All right, that's the one we just looked at. I wish these were numbered. I want you to remember this level up here. We do we calculate our Mercury bands algorithm at the end of each day, and we have to wait till 5 o'clock, not 4 o'clock or 4:15. We need the full day futures data. We run this algo between 5 and 6 o'clock Eastern time. This was the upper extension last night. There's no reason this should have traded above 34.35. Now the reason it did is because there was news of a. Are you sitting down? There was a phone call between the Treasury Secretary, the key trade advisor in China. A phone call. A phone call. Well, look, the algorithms knew that there was a phone call in the afternoon, and they did this into the close. And then it came up into this level, and I'm telling you, I've been doing this long enough with these algorithms, it should not have gone above 35. The reason I'm pointing that out is I want you to keep that level in mind, 34.35. Now, that may change. We may have a different level for you to key in on in tomorrow's video, but for right now, 34.35. Futures traded up to 34.48 tonight. They backed off a little bit to 34.38. They can take this thing higher. If it gets up into 51, that could be problematic. I don't know that it's going to go higher than that, but I want you to keep 34.35, this level, on your radar, because that nonsense last night because of a phone call. So that's what we're trading on now. I mean, end the day with negative market breadth. I don't know how many days in a row, but there was a phone call. So buy the futures because there was a phone call. The reason I keep saying this is I want you to be careful. If you're trying to trade every inch of this tape and you're trying to catch every little blip higher, please use tight stops because this thing stinks to high heaven right now. All right, that was that one. All right, we showed you the LQD investment grade bond ETF in the beginning. This is today. Now I put this out at 11:30 a.m. This level absolutely had to hold, and it got down. It didn't quite come down to 135.02. It got close, and then it moved a little bit higher. And then it didn't close well. It didn't close well at all. Now, a couple problems I have with this. Number one, I showed you the other chart. It came back into intermediate support to the tick, and that was it. The algorithms were waiting to sell it to the tick. We're right here. But here's the bigger problem. You've got this cluster of algo pivots. Whenever you get clusters of these, I mean, you can see all these that were spaced apart up here. They're now all together. Think of that like multiple layers of a wall. The more of those you have, the harder it is. So keep an eye on LQD. This is not good. It's not good at all. All right. This is now we're moving on to today. So here's QQQ. One of the most valuable metrics we have is the single daily bull bear pivot. Now, this is an algo that is calculated each morning over 90 minutes before the market opens. And that is the single most important number on the board every day. I put out a bunch of these for QQQ, SPY, S&P 500, NASDAQ, Bitcoin. I'll show you the Bitcoin chart. As a matter of fact, you can go on Twitter. I don't have it loaded up, but go on Twitter to the tick. That's where it failed. Now, how is this price the completely binary bull bear pivot every day when it's calculated 90 minutes before the market opens? I want you to think about that. It's simply because to build algorithms, you have to anchor them to time and not price. And you have to know exactly the time cycles that the institutional algos use, and then you need to know exactly the minute to run them each morning. And then you get this. Look, if our trading service did nothing but give you the daily bull bear pivot, it'd be worth its weight in gold. And by the way, I meant to mention this in the beginning. If you want to check out our website, mercurysignals.com, there's my Twitter feed, MC2085. You can email me at markanthony@mercurysignals.com. We're going to look at Apple in just a second. But if you haven't been to our website, mercurysignals.com, and I want to share this with you because the purpose of these videos is not to be a commercial. The purpose of these videos is to show you day after day after day after day. It's not a coincidence that these algos do this every day with this level of precision. You know, by accident, if you're using some kind of black box system, maybe you do this once a month, once every couple of months, but not every day. So when I share with you that these are the same algorithms that the institutional algorithms, the really expensive algorithms use, logically, you couldn't do this every single day if they were anything but that. Now, and I want to share this with you. A lot of companies, not all, but there's a lot of companies that are going to try and sell you some type of trading subscription. And they'll give you just enough information to get you to make, hopefully, an impulse decision. Go on our website. Look through the chart of the day. Look through the market reports. Scroll down the homepage. I guarantee you there is no trading system service anywhere on the market that puts as much information right up front as we do. Why? Because it's accurate. And there isn't anything more accurate. We don't need to hide anything. We put everything right on the website. And I could make this website 100 times larger, and it's just more confirming information. So enough about that. All right, so let me make sure we didn't miss a chart. All right, so here's QQQ. Bull bear pivot. Now, let me mention this. See this angle here? This angle does not exist in nature. This is what I call the bull you-know-what angle. When you see anything trading at an angle like that, on one hand, you don't know how high these things are going to go. But when you see this type of angle with no pullback, that is not organic price activity. That's not organic market behavior. This type of angle does not exist in nature. Okay, it just doesn't. So when you see this kind of stuff, you know that you're going to get one of these eventually. Okay, let's take a look at Play. That's QQQ. There's Apple. All right. Look, not a big deal on Apple, but this is one of the first days in a while that Apple did not want to have anything to do with the daily bull bear pivot. Again, we released this on Twitter. I think I posted it about an hour before the market opened. But again, these algos are run over 90 minutes before the market opens. So the one thing that is a little disconcerting is right off the open, you made a fast move down to this short-term trend algo. That's not what you want to see right off the open, nor do you want to see this. So if you're trading Apple on the long side, and you've been trading Apple on the long side, first of all, congratulations, heck of a trade, great job. But be careful, please. Nobody ever went broke tightening a stop or taking partial profits or implementing some form of hedging strategy. I am not here to give financial advice. I'm not a financial advisor. But it never hurts to take partial profits or hedge a little bit. Protect yourself. Protect your gains. All right, so I believe that was that one. All right. Dow futures, daily bull bear pivot, 28,335. Algo is run prior to 8 o'clock. Now, these bull bear pivots have zero to do with where price is trading at the time. It has nothing to do with it. At the time this algo was run, it was trading up here. Well, this is your daily bull bear pivot. And, evidently the memo that there was going to be a low volume drift higher late in the day, evidently the Dow did not get the memo. This is not good action. All right, we'll get the right one here, folks. All right, that's the same one. Nice, Mark. Way to go. And here we go. One day I'm going to figure out how to label these things sequentially. Here's the Russell 2000. Again, the algo is run prior to 8 a.m. It was trading up here. This is your daily bull bear pivot for the day session. This is not good action. You close barely above the short-term trend. Nonsense. Now this is a peach. Let me make sure I didn't miss one. Okay. This is a peach. This is your S&P 500 advancing versus declining issues. Does that look bullish? Now, and I got a tweet. And look, if you send me a tweet, I don't care whether I agree, disagree. I will always be cordial. In this particular tweet, this gentleman, he's tweeting me a lot, and he's nice, and a lot. He asked some really good questions, and he mentioned volume isn't everything. No, it's not. I don't even put volume on my charts. In this particular chart, this isn't volume, this is advanced decline line. But the gentleman had responded to a tweet I had posted that we had very heavy volume on the way down this morning and very tepid volume on the way back up. Now, that type of action, which, every time we see the market pull back lately, it's on heavier volume. And when we see these drifts up, it's on lighter volume. Then you look at the advancing declining issues. Now, anecdotally, is this a big problem? No. But if you're doing this day after day, and oh, by the way, you're at an all-time high, again, something doesn't smell right. This is your day session open. S&P 500 advancing versus declining issues. Plus 327, all right, 930. 1145 minus 225. That, my friends, is a pretty profound swing. That's not bullish, nor is closing again with negative breadth. That's not bullish either. And the problem is, if you get even a mild correction in those big 5 tech stocks, what do you think is going to happen to the S&P 500? This is not good. This is not good at all. So be careful. Look, you can make money trading the long side the way they're supporting the tape, but you got to be real careful, because at any moment now the music could stop. And when you were a kid, now I'm dating myself, I'm pushing 60, but when I was a kid, I remember early elementary school musical chairs. I don't think they do that anymore. And I was about to say something politically incorrect. I'm not going to do that. It used to be in musical chairs, there'd always be one less chair than there were people, right? Here's the problem. Right now, there's a whole lot fewer chairs than there are people. So please be careful. Yes, easy money was made on the long side lately. And if you're not careful, they'll take it right back. And I want to close with this chart. I mentioned earlier that it's very dangerous to try and trade every inch of this tape. Well, if you want to know what the institutional algorithms are doing, look, we show this to you in real time every day. Our members have access to a live chart. They see there's what 3, 5, there's 8 panels on the screen. Everything from very long-term cycles where each bar is over 2 hours, to very short-term cycles if you like to trade in and out throughout the day. But everything revolves around our day trading algo, and this is it. So went into the week long. You had a little bear trap right here to close the day Monday. That gave you this nonsense into Globex. Again, remember this angle I just showed you? This started, that is, call it about 8 o'clock Eastern Time, Globex last night. This angle does not exist in nature. It does not exist in nature. This is not organic. This is bull you-know-what with a capital B. All right? Anytime you see this, be careful. Now, you keep doing this over and over again. Here, and here, and here. I'll tell you what. There is a correction coming, and it's not going to be pretty. And I'm not saying when, because I don't know when. You know, you trade what's in front of you. You trade what the tape gives you. But this is nonsense. This is utter nonsense. So look, I mean, if you want to know what the institutional algos are doing, we give this to you on a live chart every day. We got short into the open. Nice trade. You leg out of it in pieces. Okay, a little bit at a time, and you trail a stop. Now, the algo flipped long, what time was that? A little bit before 3. And we did not take that long. There was too much risk. Too much risk. I mean, the risk reward entering this. And by the way, getting these flips long late in the day, those are a warning sign too. I mean, everything about this tape. You can trade this tape long. You can trade it short, and that goes for any instrument. You can trade anything, both long and short, as long as you have good risk management. If you have bad risk management, I don't care how strong the trend is, you're going to have a problem. So one of the big things that we talk about every single day is risk management. And I haven't mentioned this in a while, so let me close with this. You know, I've been doing this a long time, and everybody starts at a certain point. So I don't, when I talk about new traders, I never mean that in the pejorative, never. We all started. And if you're new to trading, this can be one of the most rewarding things you can do, or it can be a nightmare. And a lot of that's up to you, and it's about the psychology of trading, which reminds me, I've been meaning to do a video about psychology of trading for a long time. So we'll do that soon. But let me get to the point before I forget what the point was. See, there you go. It's gone. There. Donna, do you remember what the point was? No, she doesn't remember the point either. There was a really important point I was going to make right at the end of this. Oh, there we go. There we go. Risk management. You can trade long or short, and if you have good risk management, over a period of time, you're going to do well. But newer traders, and again, I don't mean that in the pejorative, but newer traders get so focused on the win rate. What percentage of trades do I make money versus the percentage I lose? That is not what professional traders focus on. You talk to any professional trader, and if they're honest with you, they will tell you that their hit rate, their wins versus losses, 50-50, maybe a little bit more. The money is made in the risk management. Don't ever forget that. The money is made in the risk management. You could have a 50-50 success rate on your trades. But if you're booking a whole lot more handles on the ones you're right than you're giving back on the ones you're wrong, then trading is a great thing. For many years, I've done the opposite. And part of the reason I'm so passionate about what we do here is because I don't want other people to make the same mistakes that I've made. We're here to help you, and whether if you never even consider subscribing to our service, that's fine. I hope you'll still watch these videos. They will help you, and that's why we do them. So with that, we thank you very much. If you haven't been to our website, check out mercurysignals.com. I know this is a tough time for just about everybody. And so, you know, most importantly, I want to leave you with this. If you're struggling, if things are difficult, if finances are difficult, I'm going to tell you that you're better off not risking trading. But here's one thing that you really can't live without. You cannot live without having a relationship with the Lord. You can live. You're never going to find true happiness. You're not. You might think you do. But look, things are tough right now. And I cannot think of any better time that if you don't have a relationship with God, if you have not invited God into your life, now's the best time to do it. And if you want to send me an email and you don't want to talk about the market, you just want to talk about what I just said, markanthony@mercurysignals.com. So that's going to be a wrap for tonight's video. We thank you so much for your time. God bless you. God bless your family. And we hope to see you again soon.